Hi all, Ben Gow from Harcourts Sergeant here, and today I'm joined on the couch by Simon Beck from Your Mortgage Assistant. This month's topic is going to be all things banking Royal Commission and what the impact is going to be for you as a homeowner or potentially someone who is looking to get into their next property.
The outcome of the Royal Commission, Ben, is the banks are now putting more emphasis on the broker to actually verify the information being given by the customer. So previously I would need to talk to my client about their living costs, which entails insurance, food, groceries, personal items, education costs, childcare costs. Previously, I'd have an actual conversation with my client and they would tell me how much they're spending per month on these expenses. Now the Royal Commission is asking us as brokers, we need to actually verify the information we're being told by the client. So if the client's telling me their food expense is $1,000 per month, I've now got to ask the client for their last 3 months bank statements to actually verify, is what Ben's telling me of a food expense $1,000 per month, is that true and correct? So after reviewing your bank statements, I will then determine whether what the client has told me is correct. If it's found the food cost is actually $1,200 per month, that is what I need to disclose to the bank.
So Simon, nowadays there's a lot of options for consumers to have things like Zip Pay, Zip Money, Afterpay, all of those types of pay later services. So how does someone's borrowing capacity be affected by those types of incentives out there in the marketplace?
Excellent question, Ben. Recently I have had clients where they have purchased with Afterpay. A lot of people don't consider Afterpay, Zip Money to be liabilities, commitments. So what I have come across is when I'm reviewing the person's bank statement to determine their actual living expenses, I'm coming across undisclosed debts. Now they're not unintentionally disclosed, but we do need to alert the bank to any Afterpay, Zip Money. Zip Money and Afterpay, these are considered to be credit facilities, Ben. So if any client has a payment arrangement with Afterpay or with Zip Money, there is a credit limit associated to that. Both of these facilities have resulted in a credit inquiry being made on the client's credit file. They do need to be disclosed. When the bank's checking, can you afford the proposed home loan? Under responsible lending, they need to confirm if the person was to max out their limit on Zip Money, can they also afford the proposed home loan?
So Simon, some of these Afterpay services, they do have credit limits that are attached to them, but in this example, perhaps if I've got a $3,000 credit limit and I've only spent $1,000 of that, how much of a portion does the bank take into consideration about how much I'm actually got as a debt?
Okay, so with any credit facility such as a credit card or Zip Pay, there is a credit limit attached. So in this case, if the credit limit's $3,000, but you only owe $1,000, when they're checking if you can afford the proposed home loan, they've got to make the assumption if Ben maxes out his $3,000 credit limit tomorrow, can he afford the repayment on $3,000? So when they're calculating that repayment, how they do it is they get the limit of the credit card or the credit facility and they recognise 3% of that. So in the example of you've got Zip Pay with a $3,000 limit, they're going to allow a payment of $90 per month, even though you've got nothing owing on the card.
So Simon, if I'm looking to buy a new home, what are some of the key fundamentals that the bank is looking for to be able to lend me money for a new purchase?
Okay, well let's work on an example, Ben. If the client is looking at buying one of your properties for $300,000, the bank wants to be able to determine, do you have what's called genuine savings? The bank needs to be able to determine you've held 5% of the property's value in your bank account for 3 months, or you've saved accumulated 5% of the property's value in a period of 3 months. So what that means, on a purchase price of 300,000, 5% of 300,000 is 15,000. I need to be able to show for 3 months or 90 days you've had $15,000 sit in your bank account. Or alternatively, I need to be able to demonstrate you have saved $15,000 in a 3-month period through employment earnings.
So Simon, say for argument's sake that I'm currently renting or I'm a first home buyer. What are some of the options that I have when I'm in that situation?
Okay, well, not everyone has the 5% genuine savings held in a bank account. It's very common for people to be renting. So if you have been renting a property for a period of 6 or 12 months, your actual rental history can go towards qualifying you as genuine savings. So instead of the requirement of having held $15,000 in your bank account for 3 months, if the broker can obtain a rental ledger from the property manager who you're renting through, and through that rental ledger it can be confirmed you've been making all your rent repayments on time, that will be sufficient for genuine savings.
So Simon, you've spoken about the importance of the 5%, but what other maybe fees and charges would be involved when purchasing a property?
Great question, Ben. Not only do you need the 5% genuine savings, banks are only lending, as you're aware, a maximum of 95% of the property's value. So in addition to the 5% genuine savings requirement, you also need to take into consideration the additional costs for the fees and charges, such as stamp duty, conveyancing fees, registration of mortgage. So it's not just the 5%. You generally, these other fees and charges, stamp duty, conveyancing, mortgage registration, they add up to approximately another 6%. So when you're looking at a home, you should really take into consideration, do you have an 11% deposit available for the cost of the home? So if the property is worth $300,000, 11% is a deposit of $33,000.
So Simon, in closing, what are some of the tips that you can recommend to potential purchasers who are looking to get unconditional approval extremely fast when it comes to purchasing their new home?
If you're looking to obtain a home loan, Ben, and you know you're in the market to buy a new house, leading up to buying the house, call it 90 days, you should be looking at minimising your expenditure on necessary items only. As I mentioned, the bank's going to be reviewing your living costs for the last 90 days, so you want to try to minimise any unnecessary expenditure. Secondly, the banks are now requiring evidence of existing commitments. Previously, if you had credit cards, personal loans, car repayments, I didn't need to provide evidence of these debts. So you want to make sure your latest statement is not showing you're in arrears. You want to make sure you're all up to date with your current payments on any credit facilities. Ben, with credit facilities, I need to show the bank your recent statement for all credit facilities, whether it be personal loans, car loans, credit cards, zip pay. So leading up to applying for a home loan, if you can repay some of these debts, if there's only a small amount outstanding, I would recommend paying the debt off. Make sure all your credit limits are within the limits. You're not in arrears with any repayments or any defaults, as the statements will be reviewed to see how you're conducting your existing credit facilities.
So thank you very much for joining myself, Ben Gale, Harcourts Sergeant, and also to Simon Beck from Your Mortgage Assistant. If you do have any needs regarding a broker, please get in contact with Simon. His details will all be at the end of this video should you wish to contact him. But if there's any property information that I can help you with, please reach out to me, give me a call, 0490 532 738, and bye for now.